Thank you, Jeanette, and the whole team for putting on another great webinar today on a Saturday. As I always say, I think if you show up to a webinar on a Saturday, you are definitely serious about making money in the markets, which is great because you have to be serious about it. Anything in life that you want to get good at, you have to be serious about and put in some effort. So let's have a look at what we want to discuss today. How many of you guys, and I'm going to do a little bit of interaction. I don't want you guys to like have to constantly type in answers and stuff, but just a little bit to make sure we're kind of keeping everyone on their toes. But let me know if you feel like the markets have been choppy, or maybe even over the past few months, and maybe even if you've been chopped around out of your trades and positions and so on and so forth. Let me type in a quick yes if that's something that you've noticed has happened to you. And of course, a lot of yeses coming in. And so the problem that a lot of people have is not understanding the trend and the confusion. So we're going to talk about exactly how all this works and what it all means. This is yours truly sitting here literally exactly like that at my desk. As it says, I'm a father, trader, portfolio manager. I guess it kind of goes in that order, but I do sit at this damn desk a lot. So maybe it goes in the other order, at least during the work days or during the working hours. Just quickly about myself. The background for me is I originally come from an investment banking background, then moved on to the portfolio management side. I'm the head trader and investment strategist at thestudytrader.com. And also a managing partner at our wealth management firm. But what I wanted to quickly bring up is just a risk disclaimer. I think it's always important to understand that risk trading and investing does involve risks. So as long as you're aware of that, I think we are good to move on. So the number one rule in the markets that people get told about when they start trading or investing is that the trend is your friend. How many people have heard that one before? The issue is that even though most people have heard of this one before, and it is one of the most truest statements in the investing and trading world, most people don't actually practice this very powerful principle. Why? It has to do with human emotions, fear and greed, but also the lack of perspective or the proverbial sort of tapping in the dark. So once a trend is in place, it actually tends to continue quite a lot longer than most people anticipate. How many times, think about it in your trading and investing, how many times have you gotten into a position and at say, whatever, and I'm just coming up with an arbitrary number, at say $30 a share, could have been a commodity, whatever, but just take a stock as an example. And you rode that stock all the way up to 40, right? Nice trade. That's, 30% return. But you got out of the trade and you come back to that stock a couple months later and it's at 50, maybe 60. Well, that's a huge difference between the 30% you made and the 100% that it may have rallied. How many times have had that happen to you before? And that's one of the more frustrating things for people to see is when they had a nice trade, or even when they didn't, and they come back to that same issue, that stock or whatever it is a while back, a while after, I should say, and it's gone dramatically in the direction you thought it would. So the issue was that you weren't aware of the actual primary trend. And there actually is a way to cure that. And I'm going to show you guys right now how this works. So look at Apple, for example. Traders would have found dozens of reasons over the years to either sell short Apple stock, anything from trend line breaks to overbought readings to moving average violations, fundamental arguments, structural arguments, and many, many more. And yes, indeed, Apple has actually had corrective periods over the years, of course. But almost without a doubt, traders over the years have fared notably worse, and notably is a massive understatement, than those applying a simple trend following strategy. So for example, if one would have stopped themselves out during the pandemic sell-off and likely would not have gotten back into that stock. Since before the pandemic, so even if you wouldn't have sold the stock at all, Apple is now up 90%. Actually, maybe a bit more. It's crazy. So this is important to understand. So let's start with keeping it simple, because I think overcomplicating things for most people at home is not the way forward when it comes to trading and investing. So don't overcomplicate things. Respect the trend, primarily respect the trend, eliminate the noise, and stick with the darn process. And basically for most people, it kind of looks like this. How many of you have ever sold a stock and then you watch it go higher and higher without you, right? It's like seller's remorse, I guess is the best way of putting it. How many people have done that before? I certainly have, right? And it's frustrating. And it's not just frustrating, it leads to you making grave mistakes. So let's stop doing that, right? Let's stop having that. Again, I guess seller remorse is the best way of putting it. And maybe the stock can continue for another week, another month, maybe years, right? In case of Apple or some of these stocks that you can all think of. They've been going higher for years and years and years, and most people that were in those trends for a bit have lost out on the majority of the gains. So if you are the kind of person that tends to buy high and sell low, this is kind of what it looks like. But let's talk about the psychological aspect of it all. One of my first mentors was my managing director at JP Morgan, and every time he stepped off the desk to get lunch or go to a meeting or something, he would kind of jokingly turn back around and shout back to the trading desk, that we should remember, buy low and sell high. And even though, of course, everyone will always chuckle at it, the underlying message was the truest and simplest one that we have in trading and investing: buy low and sell high. Yet for most people, it actually looks the other way around, not in any given trade, but on average, and here is why. So let's say a stock was going higher, and again, this could be any asset class. I'm just referencing stocks for the time being. So a stock goes higher, and you finally couldn't take it anymore. You said, screw it, I'm just gonna buy it, right? So you buy. But then the stock goes a little bit lower, and you simply can no longer take the heat, and you sell. Well, then of course what happens is the stock continues to go higher again, makes another high, and you're frustrated. You say, this can't be, right? I bought high, but I don't have to buy even higher. So you say, okay, whatever, I'm gonna go in again. This time I'm gonna stick with it. Sure enough, the stock pulls back, whatever news is out there, whatever noise, and it shakes you out of the trade. Again, think to yourself, how many times have you done that, and how frustrating has that been? Again, it's a psychological problem. And the reason why you're doing that is because most people are what I would refer to as mean reversionists. Basically saying that if something has moved enough, or maybe in your mind too much in one direction or another, it's too late to buy it if it's a bullish signal, or short it or sell it if it's to the downside. And that's one of the main issues that we have. Most people are mean reversionists. So we need to get out of that mindset of being a mean reversionist. And I should say at this point, it's not like there are no trades to be done ever that go against the trend. There are things you can do with that, but we're talking about trend following here today. And so we want to be making sure that we respect the trend. So if you buy high and sell low, then you need a process. And you need something that forces you to buy low and sell high, and gives you well-defined parameters of whether a trend remains intact or not. You need something that has a repeatable, rules-based approach that you can trust. And most importantly, like I said before, something that cuts the emotions out of trading and investing, because emotions is what makes us ultimately not be profitable. So if you are tired of missing out on big market trends like I'm about to show you here, then the tool that we developed and the process is something that you really should be interested in. Trends like these. Let's have a look at Netflix, for example. And this, again, I'm trying to show you getting to the right mindset. So look at Netflix. Over the course of this time frame here, the stock was up somewhere between 10,000 to 15,000%. That's not a typo. Since 2009. Yes, that's 12 years ago. But that's still a crazy ton of money to make over that period of time, 10,000 to 15,000%, right? But along the way, I guarantee you that the vast majority of traders stopped out and didn't stick with the trend. And only ultimately, because of that, took with them a little part of the trend here and there and maybe even fought it along the way. How about Microsoft? It's up somewhere between 800 and 900% since 2013. Look at this. Now that's one hell of a well-defined trend. Doesn't need much second guessing, does it? How cool would it be just to be able to remain in these trends without freaking out about every headline and inflation reading and Fed meeting and scare from whatever else is out there, and just remain these trends and ride the trend? Or how about something totally different? Because I don't want you to think we're just cherry picking tech stocks. How about an ETF like KRBN? This is carbon pricing, like carbon emissions pricing. Has nothing to do with tech that I just talked about. This thing is up 80% since November of last year. That's like, what, less than a year ago? Would have been 1,000 reasons to stop yourself out and get concerned about news about here and there, political stuff and whatever affects this thing, but it's up 80%. So what I'd like to introduce you to is something called trend following. How many of you have ever heard about trend following before? We live in such a trading-oriented world that the actual trends get forgotten. Yet trend following, if you ask any hedge fund or CTA, commodity trading advisor, is one of the most successful strategies, not just in terms of return, but also in the lack of volatility. So what is trend following? And very simply, it's just the practice of following or trading an asset, call it a stock, bond, commodity, currency, whatever, higher or lower along its primary trend. It's a time-tested, low-stress strategy for any investor and trader that is looking to profit from major market trends. Who is it for? Honestly, pretty much everyone. It doesn't matter whether you're a private investor and you're 20 years old, 40 years old, 60 or 80, you can make this work. It's great for retirees as well as much as it is good for someone who's just beginning or in the middle of their career. Hedge funds and other institutional investors have been great long-term success stories using this strategy. What asset classes does it work for? Yeah, sure, it's going to work for equities, which means it's also going to work for ETFs, which of course means it's going to work for options, and of course it's going to work for futures. By the way, it also works for things that are much more volatile, like crypto, or things that are much less volatile, like, let's say, government bonds. If we're talking about developed world government bonds, some government bonds are actually very volatile. So very simply put, again, as a reminder, the trend is your friend until it ends. And what most people have a problem with is that they constantly think the trend is over. But for most people, it ends up being the fact that when they look back, the trend continued much longer than they even thought was possible. So trade with the trend, stay the trend until it ends, but don't overstay your welcome. Let's talk about it. So what is trend following? Just in a couple more headlines before we, in a couple more sort of bullet points before we could get right into the tool. Just like trends in products and services, right? Like whatever, iPhones, let's say, right? That was a much bigger trend in terms of its initial acceleration phase, 10 years ago, but still, trends exist in financial markets. Like the more a product or stock or commodity is in demand, and the stronger, more stable that uptrend is. Conversely, the more supply and less demand for a product, stock or commodity, the stronger and more persistent the downward trend. It's really very simple. The trend or trends exist in any market environment, because the reality is something is always trending. It doesn't matter whether you have a bull market or a bear market or a sideways market, something's always trending quite strongly, either higher or lower. We just have to find it, and we'll show you how we do that in a minute. Amazon, a trend following trade of the ages, up 2,000% since 2010. Apple up 1,500% since 2010. I know these are tech stocks, but I can show you a dozen other examples that are not tech stocks that have done probably even better than that. These are massively huge stocks. Yet most people that are proactively engaged in the markets have maybe taken a fraction of those gains, maybe even lost money because they were fighting the trend and they believe the story. So what's the best part about all this? Not only does trend following work, but let's compare its volatility of that strategy compared to, let's say, the S&P 500. So I took an example that I found here, and this is over a 20-year period. And by the way, the volatility is even more if you were to forward this over the next 20 years from this, or 15 years, you would get statistically even better. So these big drawdowns, these are the volatility jumps in the S&P 500. But look at the tiny volatility, comparatively speaking, of a trend following strategy. And that's important. I'll talk about why that's so important. So we're going to look at a few charts here, and this comes straight from our market rover. And I want you to focus on the following charts here, like the one here. For right now, only focus on the either green background, sometimes the background is black and sometimes it's red. Just focus on the background color for right now. Don't focus on any of these buy signals or sell signals along the way. Just look at the background color of the screen. A good trend following model will take investors out of the market when the trend changes. And it takes you back into the market when the trade is back on. Let's take the NASDAQ 100, the QQQ ETF from just the last, 16, 15 months. Look what happened. Look how our trend following model was bullish. The green background, of course, denotes a bullish trend all the way into just before the COVID crash. It then told us, watch out, get out. And if indeed for a month or so, we had this neutral trend where there was no reason to be in that trend, zero reason to be in that trend, right? Black background to us denotes neutral trend, green background bullish, red background, as you'll see, is bearish. Well, by early April, the algorithm, the trend following tool, told us, well, it's safe to get back into the NASDAQ 100 from a trending perspective. And you know what? The QQQ NASDAQ 100 since then is up 80%. So not only would you have avoided the crash, you would have gotten back in and be up 80% without having gotten shaken out 15 times like most proactive traders probably would have been. Or look at this in PayPal. Again, it takes you bullish trend, and from the point of entry, which was just, I think just around $100 or so, the stock is now trading closer to $300. So that's about a 200% return. Imagine if you could ride trends like this and knowing that the trend is at your back and that when the trend changes, you simply get out. When the background color of the chart changes, you simply get out. How cool would that be? How about this one here? This is a completely different example. And I'm purposely showing you completely different stuff so you can see we're not trying to cherry pick. This is an ETF. The ticker symbol is IHI. It tracks medical devices stocks. Look at this here. It took us out of the market just before the COVID crash, told us it's no longer bullish, be careful. We would have not been in the trend as it completely crashed. It then went bullish for about a couple months or so, but then it would remain choppy again and no trend according to the algorithm, and kept us out of the market. But then in, I think it was late August, mid-August or so of last year, it got us back in. That ETF has since gone from about 50 and change or low 50s, now up heading towards $70, right? It's very simple, but you have to have a way to consider these trends. So let's talk about trend and trade, because we do have to distinguish between trend and trade. And let's begin with trend. As I've alluded to before, volatility is the bogeyman or boogeyman, depending on how you want to pronounce it. Many market participants get shaken out of trends due to volatility within the trend. And because of that, they then fail to get back into the trend because of fear that the trend is over, when in reality, it's just about to resume. How many people can identify with that? Think about this. In other words, and this is the really sad part about it, in other words, many market participants don't make money even when the market's going higher. If I had $10 for every person that has told me over the past, let's say 12 months on the phone, on our clients, prospects, I should say, because the clients understand it, that they haven't made money over the past 10 years. I would have had a nice little side income, to say the least. So just because markets are going higher doesn't mean most people make money. In fact, most people that are self-directed, proactive investors don't actually make money. And that's a real problem, right? So let's look at another couple of examples here. Like, for example, Microsoft, right? So, I talk about patience as a virtue, right? This is important. Human emotions want us to take quick profits, but let losers ride. How many times have you done that before? Human emotions want us to take quick profits. If you see a profit, if the stock is up 5 or 10%, aren't you itching to take profits? Yet when something goes against you, you're more than happy to let it go a bit longer because, well, it could always turn around, right? The problem with that is that it doesn't work, right? Trend following is all about doing the complete opposite of that in order to reap huge rewards. And trend following, thereby, is a rules-based strategy. Let me show you how it works. So this is another example here from the Market Rover, our trend following tool. Along the way here, just from, let's say, last April, and when I say last April, I mean April of 2020, you could have had 1,000 arguments. Is that a double top there or a head and shoulders bearish pattern in August and September of last year? Nope, the long-term trend remained intact and the stock has surged higher since. We've had a bullish trend all along, right? Most likely, traders that fail to get back into this trade, leaving tons of money on the table and frustrating and watch it go higher in a very frustrating manner to them. But we've talked about trend, and I want to make sure we start going into some real, current examples here where you guys give me your ticker symbols in just a few minutes, and we'll show you bullish and bearish trends and everything. How do we ensure that you actually have success in this type of trading or strategy? The reality is that every trend at some point will end. The simple thing is you respect that, and then you just find a new trend because something is always trending, and we'll show you exactly how you can do that in a very simple, like 2-click manner on our Market Rover. Let's have a look at another example here. For example, in Zoom video communications. Zoom video, ticker symbol ZM. Look at when this thing went bullish trend. This thing went bullish trend in literally just as the pandemic hit, or at least as we started to be aware that it was taking hold. Look at that. It went bullish trend. The stock then went from, I don't know, is that $160 or so? It went all the way up to 600. And I'll talk about the trades along the way. If all you would have done is respect the trend, you would have traded the stock or held it from 160 up to about the mid 300s. That's a pretty darn good return without having to worry and be concerned about getting shaken out of trades all the time. And then look what happened. As we started to get better news around the pandemic getting better, our tool told us, hey, this stock is no longer bullish. It's now neutral. That's your black background. And then, sure enough, by late spring of this year, it told us, hey, it's now bearish. Stay out of it, or if you want to short it, fine, but it's definitely not something you want to buy, right? So this is really, really cool. Is this starting to make sense, folks? Give me a quick yes if you can see the power of this kind of trading and trend following, because we're about to go into the next thing. We've talked about the trade. We've talked about the trend, right? Very simple. You go into the trend when the background's green, you get out of it when it goes into neutral, or certainly if it's bearish, you can get out of it or even go short, certainly, and we'll show you examples on that. But let's talk about the trade. What about trade? I know a lot of you guys are sitting at the edge of your seat. I want to trade, I want to trade, I want to trade. Give me a trade. Sure, let's talk about trade. Now that you're able to find trends using the Market Rover algorithm, let's talk about trading within the trend or around your trend following positions. This has several benefits. Number one, if you trade around the trend, you remain long a core position in whatever, let's say, stock that you own. And by trading around it, you make potentially additional profits from trading within the trend. Like, for example, you could be You could be doing a covered call selling all along, remaining bullish in your trade, in your trend. And on top of that, if you're the more anxious person that's constantly concerned about the trend stopping, it reduces your anxiety of being just long without risk management, right? So trading around the trend, within the trend, if you want to, I, think you can certainly do that. You absolutely don't have to, because the trend alone is going to make you a lot of money if the trend, of course, lasts. So I think what's really important if you're going to do this strategy is to keep a core position throughout the trend, and then you trade around that core position, not in a hectic manner. And when the slope gets too steep, then take some partial profits. Like if a stock goes completely vertical, just take some profits along the way. All right. So let's look at this a bit more. Here's how it works, right? So let's have a look at this ETF. This is a ticker symbol HACK. Well, when the trend goes green, you simply get long the stock. You see how it went green here? This was August of last year, 2020. Well, the stock has since gone from the high 40s to, it went all the way into the mid 60s. It's still now in the mid 50s. That's still a pretty good trend. Along the way, though, now let's focus on those little buy signals you see along the way. Along the way, it's given you multiple opportunities for trades, right? So you long the stock, and if you want to be a bit more proactive, and I'm not saying you don't have to do this, but if you want to, our market rover gives you trades, right? So you have a buy signal here, profit target 1 and 2, boom. Same thing here, buy signal, target 1 and 2, target 1 and 2, target 1 and 2. So that's the trade, different from the trend. You just want to do the trend, which I highly encourage anyone to do. You just get long a stock once it goes green, and you get out of it once it goes into a neutral territory, or certainly if it goes bearish. Let's look at another one. This is Marriott. Marriott turned bullish trend in, what was that, late November of last year. It's been bullish trend, and the stock has been moving higher, not massively, but it's bullish trend. And we had a beautiful buying opportunity from a trading perspective along the way. Entry signal, profit target 1 and 2, and you could write it as well, of course. So I hope you guys are starting to see how this works. What I'd like to do now is I'd like to go into the market rover, and we're going to do this live. I understand today here on Saturday, the markets are closed, except of course, maybe cryptocurrencies. But I would like to take some time here and have you guys type in some ticker symbols that you would like me to pull up inside the market rover so you can actually see how this works. So what I'm going to do is I'm going to go to our members page, and I'm going to make one click, and that's right here. I'm going to click on market rover, and when I click there, what's going to happen is that it's going to open up this page. So the market rover is not something you have to install. It's cloud-based. It's hosted on our website. It's there. There's nothing to install, no complicated whatevers and technical issues. It's super simple, one click, and it's all there for you to peruse. So let me just take some of your ticker symbols and kind of show you how this works. And I am going to ignore everything else on this chart on the market rover for right now. I'm just literally going to take some of the ticker symbols you guys would want. So the first one here is from Chris, and he wants to look at BOOT, Boot Barn Holdings. I don't even know this, but fair enough. So Boot Barn Holdings for Chris. Let's look at this thing. It was bearish for a while, then it was neutral, and then in, what was that, mid-October of last year, it started to go bullish trend. Well, what do? You buy the stock and you just hold it. That stock since then is up 185%. Along the way, you had multiple buying opportunities if you wanted to trade. Buying opportunity here and here and here, and blah, 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 right? So again, let's distinguish between trend and trade. You don't have to do the trades, but I know that a lot of people are itching to do trades. So if you want to do that, do it. Otherwise, just stay long the trend, right? The next one is mRNA from Steve. Moderna, of course. Let's have a look at this bad boy. Moderna is a vaccine maker. Of course, I think you probably all know, maybe some of you even have the vaccine. Let's have a look at this thing. So this thing went bullish, in March of 2020. Okay, see the green background? See how it went green background right there? Just to show you, Steve, I think you typed this in. This stock is up 1,420%. That's the stock, by the way. You can do options trades if you want to, and then that'll be ridiculous profits. And along the way, Steve, look at the buy signals you had from a trading perspective. Again, let's distinguish between trend and trade. Here and here and here and here. We just got one a few weeks ago here. Who likes this? Can you guys see how this works? All right, let's look at a few more. How about Ford? Let me see, Ford. Oh, that's silly. F. Oh, sorry, I should be doing here. All right, let's look at Ford. Let's see here. This thing was bearish, then it went neutral, and then it went bullish. So Ford went bullish back in also October of last year. Since then, it's up 80%, and along the way, you had trend following opportunities. Trading opportunities. Trading opportunities, buying trade here. The question is, why do you have to do these buy trades along the way? You don't have to. You can, but you don't have to. Why would you? It's a rhetorical question. Why would you, if you could just own the darn stock and still be up 80% since back? That's a hell of a trade, by the way. And that's just with the stock. If you did options, like I said before, that'd be a whole other story. Caterpillar, okay. And I'm literally just picking through the stocks, or not picking, just taking the stocks that you guys are typing in here. Let's get Caterpillar. It just recently went neutral, by the way, right? So I told you to get out of this damn thing, in a few weeks ago, right? But along the way, it went bullish in September of last year. If you would have bought it there, and gotten out of it there, that's a 40% return, and you would have had trades along the way. So Caterpillar just had an ugly day the other day, and guess what? We were not in it. Why? Because it was no longer bullish trend. How nice would that be? You guys see that? Win. That's an ugly one. Let's have a look. All right, see how this works? So the thing went bullish, and then it went neutral. Trades along the way. Look at the nice profit targets. 1 and 2, 1 and 2, everything hits. And by the way, it's been bearish now for what is that, a month now? Not quite a month, and we're getting sell signals. You see that? Bearish right there, sell signal. We just had a sell signal a few days ago, and it reached target 1 and 2 very quickly. Can you guys see that? All right. This is right now, by the way, guys. This is the current price. I'm not moving. Look at this. This is September right now, right? I believe we're September 25th today. Bank of America, sure. All right, Bank of America. So bearish trend, then it went neutral, and then it went bullish in November of last year. Bank of America is since up 53% and trades along the way. You see that? XLF, yeah, that's very much related, of course. That's a financial. XLF, that's an ETF. Went bullish also last November. Since then, it's bullish trend. It's up 47%, and look at the trades you had along the way. Buy, 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 buy. Again, this is in addition to you being long the stock. You guys see that? FedEx, sure. That's an ugly one. Isn't that an ugly day the other day? All right, let's have a look at this one. Current price, right? This thing went bullish in September of last year, right? If you would have bought it at that point and sold it when the stock was no longer bullish, you still had a 34% return. Trades along the way. And by the way, it's been neutral. It's probably about to go bearish since a month now, or a little bit more. So you would have not been exposed to that ugly downside we had the other day. SPY, sure, there it is. SPY, S&P 500. Let's have a look at the S&P. Of course, why not? All right. It went back bullish in August of last year. The S&P 500 since then is up 29-ish%, trades along the way. Do you see that? Who likes this? Zillow. Okay, I think I have to type it in here. All right. Zillow, sure. This is another one of those pandemic stocks, right? So let's have a look at Zillow. Zillow was neutral up until April of last year. Then it went bullish trend, so we buy the stock. And if you would have sold it when it went back to neutral, you still had a 200% return. Yes, you could have ridden it all the way up to the top and made 400, but there were trades along the way for you to do that as well. And by the way, it's been bearish since, and we're getting beautiful sell signals along the way. We just got one the other day, by the way, as well. PLCE, is that Children's Place? Yes, exactly. Children's Place, all right. It was bearish, then it went neutral, then it went bullish. The stock, since when it went bullish in December of last year, is now still up 70%, and we had trades along the way. Trade, target 1 and 2 being hit. Do you guys see that? Give me a quick hell yes if you like this. GameStop, okay, that's a crazy one. Let's see if this worked. All right, GameStop, I mean, crazy volatility. So GameStop went bullish, it was bearish, and then it went bullish in August of last year, 2020. If you would have just bought it based on that, you would still be up 1,730+%. I'm not making this up, I'm just taking the ticker symbols, and yet trades along the way. You guys like it? iHeart, or IHRT. Okay. iHeart, it was bearish, then it went neutral, and then it finally went bullish in December of last year. And the stock is up 112% since, trades along the way. What is that? HLT, is that Hilton? Mike, HLT, here, this is for Mike, HLT. Neutral, then it went bullish, trades along the way, and there you go. Make sense? How about Facebook? Yes, sure. Let's have a look at Facebook. All right, Facebook was neutral, then it went bullish in March of this year. Stock is now up 34%, and of course trades along the way. Is this making sense, folks? Now, let's talk about, let me quickly arrange something here. I need to make sure you guys have this all under control. Oh, AMD, sure, sorry, I know a bunch of you guys typed in AMD. Let me take it back down. AMD, all right, AMD, it went back bullish AMD in March. The stock is now still up 33%. It's still bullish trend, and there were trades along the way. You guys see that? All right, perfect. So one of the most important things is what we've learned with trend following over the past 20 plus years is to not make the following grave mistakes or mistake. And that is not to just focus on 3 or 4 stocks and trade every single signal that you get. Because real high probability signals only show up every so often in any given stock, index, currency, or commodity. If you only focus on one index or 1 or 2 stocks or 1 or 2 commodities, you're going to have a very low probability way of making money. Yeah, so don't do that. So how can we get over this? Well, let me show you. What we did is we developed a very powerful scanner to find the highest probability trends and therefore also the trades. So let's go back into the market rover to show you exactly how this works. So we're back at the market rover, and I'm just going to get to the main thing here. So here we go. So the easiest and quickest way for you to find the latest signal every single day is up here in the upper right-hand corner. That's all you have to look at. It literally takes, what, 5 seconds. This gives you the latest buy signals from a trading perspective within bullish trends, or of course sell signals within bearish trends of stocks within the S&P 500. That's it. It's literally one click. You look up here, and let's just look at, for example, these are signals that fired off yesterday, Friday after the close. to be taken action on Monday morning. Let's look at Macy's, for example, M. I think everyone knows that stock, or at least the company. So that's the latest buy signal. This thing has been bullish trend for who knows how long. The stock is up 140+% or whatever it's been since last year, since it went bullish trend. And look at the trades along the way. We just got another trade. And it gives you profit target number 1 and 2 right away and a stop loss. And again, you could do this with options as well, and astronomically increase your rate of return. And that's just stocks in the S&P 500. We're going to show you all the others here in a second. Let's look at another one here, DFS. What about this? DFS was also just triggered Friday after the close to be taken action on Monday morning. DFS has been bullish trend since October of last year. The stock is up 111 or so percent, right? It's giving you an entry point, so profit target 1 and 2, and the stop loss. And by the way, this chart can also be made full screen size, just so you know. But let's say you want to go a little bit beyond and take more than 10 seconds a day to look for the latest trade. And you want to look at stocks in a universe that expands beyond the S&P 500 stocks. Well, then all you do with one click, you click on where it says T signals right here. You see that button? You click on T signals. So you go on T signals. Well, let's have a look at this here, and I'm going to just look at some bullish signals, so you can see how many days old the signals are. Let's just look at a couple random ones, and absolutely no sort of picking here. Let's just look at whatever, I don't even know, Comerica, sorry. This thing just gave us a buy signal to be taken on to be taken action on Monday morning. Profit target 1 and 2, and again, you can write it with a trailing stop. There's a trailing stop involved here that you can trail it higher, right? That's it, and you can see it's been bullish trend since November of last year. The stock is since up 55%. How nice would it be to make 55% just on the stock itself, just being long it without having to worry about it too much? Let's see here. How about Ryder here? Whatever. Again, I'm just picking these. Just got a buy signal to be taken on the action on Monday morning. Profit target 1 and 2, and a trailing stop you can trail as well. The stock, by the way, since it went bullish trend, is up 82%. Let's look at a couple more. For example, I don't know, what's a stock you guys know? American Express. Let's have a look at this one. AXP. All right, just got a buy signal here. Profit target 1 and 2, and a trailing stop. The stock, since it went bullish trend, by the way, is up 54%. Let's look at some bearish stuff, just so you guys can see. So bearish, let's see, what's a stock you guys know? Maybe Clorox here. This is bearish trend. It's been bearish trend. It's been bearish trend since February. Since then, the stock is down 24%. And look at the beautiful selling triggers we got, trading selling signals along the way. You could have just been short since then, or you could have taken trades along the way as well. Let's see, Chinese internet stocks, KWEB. That's an ETF, KWEB ETF, right? Told you to go short or sell it in July. KWEB is since down 27%. Trades along the way. We just got a new trade to be taken action on Monday. Give me a quick yes if you like this. One more thing I want to show you on the scanner. So what if you're asking yourself, Serge, this is great, but you know what? I wonder if you can tell me which ETFs, which sectors are bullish or bearish. You know what you can do? You see this little tab up here? With one click, literally, click on ETFs, and then we can sort them by trend, and you will see how many sectors and other asset classes and subgroups of the market are bullish. And you can see that most of them are actually bullish right now, except for a couple of them that are bearish, and some of them are neutral. So like, for example, what's neutral here? There's only 4 of them that are neutral, like XTN, transportation ETF. Right, and actually this is about to, oh sorry, this one is still bullish, excuse me. What's neutral? SLX is neutral, steel, right? Steel, it was bullish and now it went neutral. or on the bullish side, right? So you can quickly see which trends are intact. Like say bullish, for example, consumer discretionary. I just saw it a second ago. Where's XLY or XLK? Let's say whatever. I couldn't like XLY, right? Bullish trend. Who likes this? Yeah, crypto. Sure. Let's have a look at this. If you guys want to look at crypto, by the way, I should show you this. Let's look at, for example, whatever crypto you want to look at, like Ethereum, for example, or ADA. You guys want to look at? Okay, sure. ADA. It's Cardano. Let's have a look at what works there. Well, we were bullish, then we were neutral, then we went back bullish. Since then, Cardano is still up 101%. We had a beautiful bicycle there as well. So it works in all asset classes. The important thing is to respect the trend. Now, one of the greatest things about all of this is that people are already making massive profits with it. Look at, for example, this guy made $5,000 with some puts he bought. This guy made $606 on HCA on a trend trade. This guy, Mark, said he was even doing some back testing and finding that you were even finding 50, 60, 100% returns a little weak. This guy was using options, of course, right? Unbelievable. This guy here did this, and this is not a typical return. This guy made $22,000 within whatever he wrote to here, the first like few days or something of using this using the tool. SMH netted Kevin almost $3,700. This guy's portfolio is up 10%, and so on and so forth. Now, one of the best things about this is that not only do you have access to the market rover, it's in its full glory and unrestricted access. We actually send you by email every morning the best trade idea into your inbox. So if you say, listen, this is great, I love the tool, but can you just send me the best trade? Sure, that's what we do. The trade ideas have a profitability or between 70 and 85% of trades are winners. We are up, these are the actual stats right now in those trade alerts we send out. We are up in 2020, we were up 125%, and that's on the stocks. That's not on the options. I know a lot of people quote the options. Of course, then you're going to be up thousands of percent. If you did options, you'd be up probably 500-600%. The return on capital in 2020 was 125%. We're up year to date, just shy of 100% return on capital on just those trades of the day. So again, if you're saying, Serge, this is great, but just send me the damn best trade from your tool every day. Sure, you got it. This is what it looks like. This is the email you get every morning. We get to tell you the exact trade we're doing. We give you a profit target 1 and 2, a stop loss, and we also give you an options alternative. If you'd like to do the trade with options, we send it to you. How cool is that? So yes, you get full access to the market rover, but if you don't want to even do that and you just want to trade, sure, we can send you that, and we do that every morning 4 to 5 days a week. So by now, I want to ask you if you found this helpful today. And do you think that time was time well spent? And do you think that you can use what you've learned here to grow your portfolio and maybe provide you and your family with a better quality of life? But how would you like to get results even faster and get bigger results? And would it be okay? I can show you how you can get access to all of this. The reality is that you have essentially 2 choices. The thing is that the first choice would be just to kind of sit on the sidelines for several months and then look back and look at your trading account and say, oh, I missed out on all these opportunities. If I'd only purchased Amazon stock, if I only had bought Apple or whatever stock there was or whatever ETF or commodity, and if I'd only trusted my gut and took action. So you can take what you've learned here today and leave here with the intent of trying to figure this out yourself. Or you can be the other person and make a choice. And the choice is to take action. You can be the other person who in life just seems to just kind of get lucky, basically. And you know that kind of person. It's the person that buys all these things before they pop and takes action. So I decided it would be unfair to give action takers here on the webinar not an opportunity for us to work together and give you access to the market rover. So what you're going to uncover here is the trade of the day alert service with full unrestricted access to the market rover with huge profit potential to turning this into a true windfall opportunity for you. Again, you can see what some of the people are doing. This guy made 30+% in 6 days in just Moderna alone using the trend following tool. This guy's up 25%, FedEx 28%, and these are the stocks, right? Forget options, that's a whole nother level. So the whole value here for the real-time swing trade alerts that we send you out, again, with full access to the rover, is $1,997. And again, you can see what some of the people are doing in terms of profitability here. Now, what we're going to do for the first 50 people is we're also going to give you full unrestricted access for 90 days to our inner circle members area. And if that wasn't enough, we'll also give you access to the chat sessions we do. We have a chat room that's open from 9 to 12 every single day during the week, during the trading week. And as I promised, we're also going to give you access to not only the members webinars we do, but also, of course, to the Market Rover. The Market Rover, we've shown you here today what that looks like and what that's all about. So if you committed to taking action, the total value of all this here is $6,379. And again, we talk about the Market Rover extensively. You can see why this would be a steal even at that price. But what we're going to do is not only knock off $700, but actually a total $1,000 from the $2,000 level. So $2,000 is our base price that we sell it at. $700 is the VIP credit we usually apply. We're going to knock off another $1,000 today, VIP credit, just for you guys here at this amazing event. So you can get started here today for 90 days for only $297. I actually can't believe we're even doing this, but it's 3-month full access to the entire Market Rover tool, to the full on package that you've seen here and we've talked about, but it's only for the next 50 people. You go to steadytradersecrets.com/now. steadytradersecrets.com/now. We send out a trade alert every day of the week, and the Market Rover spits out probably another 10 to 15 a day, right? We send you the best one that we think you take, but you see how awesome this tool is. So the $297 for all of that. You get started today for 3 months for 90 days. You go to steadytradersecrets.com/now. Now, some of the questions are: what time of the day do you send out the trade of the trade of the day alert? The trade of the day alert gets sent out just around the market open, a little bit before. It's always a swing trade, and it's always going to be based on the Market Rover. But again, that's just the one that we want to show you. The value inside the Market Rover is insane, right? So we showed you how it works. You get full access to everything for a full 90 days for only $297. What are the ticker symbols that you choose in your trade of the day? Well, the Market Rover, as you've seen, has in it equities, ETFs, cryptocurrencies, and indices, and even currencies, by the way. And we are looking to add futures at some point in the future, no pun intended, as well. Super simple, and you guys have seen how awesome the tool works. So who in here is getting more convinced that maybe you should start considering a trend following process? Give me a quick yes. Come on, there's got to be a lot of you guys that like the idea of a trend following and not the constant in and out of the market. And by the way, again, the Market Rover gives you trades every day. But what's important is that you respect the trend, right? So again, you go to steadytradersecrets.com/now. And that is good again for the next 50 people. So just make sure you get in there in time. And let me see here. Perfect. Yeah, great to have you guys all come on board. By the way, we do offer a personal onboarding phone call. So if you are going to be one of the first 50 people, we will be making ourselves available for a personal onboarding phone call to make sure we answer any questions that you might need, make sure you quickly know how to use the Market Rover, which is super crazy simple. But of course, we are there to help you. You get full access to the inner circle. Again, the trade of the day track record is up 100, almost exactly 100% year to date. We made 120% last year, and that's on the stocks. That's not the options. The options, of course, would have made much more money. So again, it's steadytradersecrets.com/now, and it's good for the next 50 people. Yes, also, by the way, we do a weekly webinar, and in the weekly webinar that you can join and will also be recorded, you are going to get a full rundown of the Market Rover. We discuss trades, opportunities. Let me just quickly flash it up again so you see what the Market Rover looks like. Again, it's steadytradersecrets.com/now. And again, it's good for the next 50 people. So if you like the idea of just staying in trends, like again, let's go back to the first example we started with the NASDAQ 100. If you would have had this tool, you would have been taken out of the NASDAQ 100 before it crashed for the COVID crash, taken back in, and you'd now be up without having to trade 50 times along the way. You'd now be up 80%. And that's just in the QQQ, and we'd have had trades along the way, right? 297 for the first 3 months. After the first 3 months, you can continue at, I believe it's 147 a month, or they make you like an unbelievable annual offer that you can use as well, or and I think a quarterly offer as well. So looking forward to having you guys all on board. I know I'm literally just running out of time, so I want to push it back to you, Jeanette. Thank you all for joining, and have a great rest of your weekend.